What's up, guys? It's Brian from Hasher Hub. It's about 9:22 a.m. Eastern Time, March 15th, 2018, and we got a trading video coming to you. But first, hit that subscribe button, hit the notification bell, especially if you guys are new to us. We do lots of technical analysis here. Plus, we have giveaways on the weekend. What's better than that? Join us also on Steemit and DTube. Subscribe there. Upvote, resteam would be greatly appreciated. But let's get right on into it right here. We're going to be talking about Bitcoin, even though right here this is the S&P 500. So let me click off of this. But S&P 500 is not looking too good. This is S&P 500 on a 30-minute basis. But anyway, let's go to Bitcoin. Things that are a little more exciting, right? So all right. So what happened overnight? Overnight, I think when we were making this video last, I think we were right around this level right here. And the market was coming back down. It was selling down a little bit further. We recounted this leg right here, this third wave, to what we have right here. 1, 2, 3, 4, 5. I believe that's what we got going on. And it's looking really good as far as Fibonacci retracement and extensions, etc., etc. This wave right here. So I'm very happy with it. I'm very confident with it. So next, now remember, this is the third wave of a larger third wave. Remember that larger third wave is 1, 2, 3. Remember, the 3 now is going to be down here, right? 4, we'll get to that in a second, and the 5, we'll get to that just after that, okay? So, and remember, if we zoom out a little bit more, what are we looking at, right? We're looking at an A, a B, and a C. Remember, an A, B, and C is basically a typical zigzag that's coming down, a corrective zigzag that's coming down. It's sometimes also referred to as a 5-3-5, which means 5 waves down, 3 waves up, 5 waves down. And so you can see that in all time periods of a market. So right now, actually here, right? Remember, 1, 2, 3, 4, 5, right? What are we looking for right now? If this is 5 waves down, we're looking for 3 waves coming back up, right? And then another 5 waves coming back down. So let's look at the 5 waves down a little bit more. This is a 30-minute basis. We can look at this maybe on a 15-minute basis. But what are we looking for? Okay, we're looking for an A, a B, and a C, right? So we're looking for 5 waves up. 3 waves down, and then 5 waves back up again, right? You can count this 1, 2, 3, 4, maybe 4. Maybe we're having a kind of an extended 4th kind of correction right here, and then maybe we'll have a 5th wave, and then maybe we'll have an ABC coming back down, and then we'll have another 1, 2, 3, 4, 5 coming back up. Okay, that's a simple way to go ahead and look at it. There's more complex corrective waves like ABCDEs, which take all sorts of other various different formations. But right now, I always tend to look for an ABC first. That's basically the way to, more times than not, that's what happens. However, on the 4th wave, it tends to be a little bit more complex, right? But what I will say is this, is that there's this rule of alternation with regards to Elliott wave theory, saying that if the 2nd wave is complex, then the 4th wave is going to be simple, and the opposite is there true. Also, the same thing is that the 2nd wave does not retrace very much. Well, then the 4th wave will retrace much, and the opposite is true too. So let's take a look at this real quick right here. Okay, so I'm going to look at this on a Fibonacci retracement basis. So I'm going to take what I believe is the top of the 3rd wave to the bottom of the 3rd wave right here, and I'm going to see where are we right now. Okay, where we ended up right here was a 0.382 retracement, and hey, that could be sufficient. That absolutely could be sufficient. Where do I think things could get? If it's really aggressive, it could get to about 8,600 on the retracement, which is a little bit higher than the 0.5 retracement. Meaning this wave, this 4th wave, would retrace more than 50% of this larger 1, 2, 3, 4, 5. Okay, the bottom of the 1, which is really a hard resistance, would be right about here, and that's about 8,600. Okay, so that's really kind of where I'm getting this number from, is about this 8,600 level right here. So at the same fashion, we could have a 1, 2, 3, 4. This could have been a truncated 5th right here, and then we're going to get an ABC, and then we'll get another 1, 2, 3, 4, 5 coming back up, or the ABC can come back down lower. Okay, so the way in which I like to go ahead and I look at these things, I like to look at basically that this, let's just for argument of sake, let's just say this is 5 waves up, right? Let's say it's 5 waves up to right here, right? So then I would look for, whenever the ABC comes back down, I would look for the same length of this right here for the C wave, okay? I would look for the C wave to be the same length as the A wave, okay? Or the C wave could be slightly less too, okay? So that's the way in which I normally try to trade these things, type of things, look at these types of things, etc., etc. So somebody had commented recently that they, you know, based on the analysis, they got in somewhere around, I believe this 7,700 level, and they got out somewhere around this 8,200 level. Awesome trade, beautiful trade. That's exactly the way in which it's supposed to work, I'm very, very happy for that. I would love to hear more from that from you guys. So yeah, so that's what's going on right now with regards to that. So as far as the 4 wave is concerned, okay, you know, we could draw it as high as kind of this 8,600 level. You know, I'm gonna draw it right here. Okay, I'm gonna draw it on this 85.19. Okay, doesn't mean that it has to get there. Okay, it doesn't mean that it has to get there, and we're gonna see more of where this could get once we see this ABC correction, meaning the smaller ABC correction. Remember, we have 5 waves up, and we have ABC down here. This is an smaller ABC of a larger ABC over right here, okay? So I would go ahead and take a look at that, and when that happens, then I'm going to be going ahead, I'm going to be looking to see exactly where I think this 4 may possibly get to. And it'd be a great trade would be to go ahead, take a look at the top here, assuming this is the top right here, after the ABC comes back down, and then if the C, of the larger C, you know, comes back up, and when it breaks above here, you can pick up a small, you know, a small little profit right there. That's one way in which I would trade it, with having a very close stop loss. So now where could the 5th wave you know, get to? Okay, and I'm going to go ahead, I'm going to look at it in 2 different ways. So right here we have the top of the 1, the bottom of the 1, the top of the 2. Okay, I'm bringing the top of the 2 right here. Right, I'm actually going to bring this across. All right, so right now you can see that this wave, this 3rd wave right here, pretty much stopped. Pretty much stopped right here. Okay, this is the 1.618. Okay, right here, 1.618. Pretty much stopped just about right there. Let me go ahead and delete this smaller one so as not to confuse anybody. Okay, because I nearly confused myself. So 1.618. is right where the 3rd wave had basically stopped. That's on the longer side of 3rd waves. Okay, remember we have 1, 2, 3, you know, 4, and where is this 5 going to be? Now the 5 could get down to this 2.618. I would argue that that's not going to happen. Okay, there is a fair amount of exhaustion that I imagine is going to start happening within the market as far as the trend exhausting. So what I would assume, and this happens quite often, is that it gets somewhere in between the 1.618 and the 2.618, and that's somewhere around a level about 7,127, right? Somewhere around there. Another thing I want to also show you guys, and we had spoken about this yesterday with that crazy stupid analogy, is this, right? So we have the 3rd wave coming down right here. We have a 4th wave, which is a corrective wave. And what do we see what's going on with volume, right? We see right here, okay, volume kind of coming down. Yes, we had this spike right here. Okay, we had this spike right here because, you know, for the reason of exactly what I just showed you as far as Elliott wave is concerned and where we came down to. Okay, everybody is looking, you know, at this as an oversold, super oversold moment. Okay, even look at the Laguerre RSI. Laguerre RSI freaking nailed all of this. Okay, it's money. Yeah, I mean, you can almost trade the Laguerre RSI with tight stops and probably do pretty well. I haven't looked into it as too detailed orientated in that manner, but I'd imagine that could possibly even be a trading strategy. So even right now, what I'm looking at right now is, you know, almost looking like there's some sort of a, you know, some sort of a wedge, you know. I don't know. Seems really small, but I don't know. Maybe it has something to do with it. I'm not putting too much faith into it, but yeah, these are the type of things I look at when I'm when I'm trading. As I'm trading, I'm always trading, so I'm looking at them all the time. In other words, so that's what's going on there. Let's go ahead and take a look at the resistance levels. Okay, so we have a 1 hour resistance level. We were talking about this 8,379. The market basically almost came up to it. We actually had some updated resistance levels, but I was sleeping during that time period, so obviously I couldn't update it. So basically right now, what our 1 hour resistance level is going from 8,379 to 8,200. Okay, 8,200 bucks. $8,200. So so I know the market is sitting right on top of it, right? It's also a thing. It's also like basically like the average of kind of this zigzag that's kind of going on in here right now, right? Now, eventually, if we start breaking above it, this 8,200 1 hour resistance level is going to pretty much go away. We'll go ahead and keep it up most likely in the event that we come back down. I'd love to kind of just see how it plays. All right. Next, 4 hour resistance level is about 83.77. 83.77. So 83.77. Now 83.77 could be an area that we get to with this C wave coming up. All right, it's not necessarily out of the ordinary that possibly the C wave may not get any higher than this 4 hour resistance level. However, I do believe it could get higher, even kind of to this 4 territory. So we have a lot kind of going on here. We also have kind of this high right here of this 4 wave of the smaller 1, 2, 3, 4, 5, which is basically the smaller subwaves of the third wave of this larger third wave from the 1, 2, 3, 4, 5. Okay, and that's obviously creating some sort of resistance right there. All right, so I think that's basically really about it for right now. On the daily basis, let's go ahead and take a look at things on a daily basis really quick. Yeah, we're well below the 200 moving average. Oh yeah, the daily resistance line may change basically from this 10,540 to 9,510. But that's not an official number just yet because of the fact that today has not ended yet. The candle's not over. So just want to keep that in mind for you guys for right now, that most likely if we kind of stay around these levels or go lower, don't go too much higher, then the daily resistance level is going to be kind of somewhere around there. But basically on a daily basis, I mean, this is not looking. I mean, we're below the 200 moving average handedly. The 500 EMA is like a distant memory away. So let's take a look at things on a 6 hour basis. 6 hour basis, yeah, similar situation here too. Similar situation. 2 hour, yeah, same thing. All right, so that's about it, guys. So stay light on your feet. Yeah, stay light on your trading feet. Don't get too set in any particular direction. Keep those stop losses nice and tight. Understand your risk. So with that said, have a great day, and we'll be speaking to you later. Bye.